Greetings, members one and all of the Salivation Nation. Unprecedented. We've never seen this before. Many of you have heard that kind of talk the last week or so with regards to precious metals, the gold to silver ratio, the massive demand for precious metals, especially silver, as it reaches an 11-year low. We're going to explore a little bit of the silver market here and ways to kind of deal with it. In the past, what's driving this market? We'll explore that right now. So this is the deal. MarketWatch has posted this article here. Physical demand for silver spikes as the price drops to an 11-year low. And that's really nothing new as of the last couple of days here, but it is something else. Silver prices have dropped to the lowest level since 2009, boosting demand for the physical metal at a rate not seen in a decade. And I think Silver Dragons have posted a video how this has happened before, back before the recession. And supplies of physical silver as well as gold remain well below extremely strong demand, as said Dana Samuelson, president of precious metals dealer American Gold Exchange. The fall in the underlying gold and silver prices, coupled with the potential recession due to the sharp economic downturn the coronavirus is causing, has spurred the public to buy physical precious metals at a fastest pace in 10 years. And you know it's happening. It's everywhere. In fact, I'm seeing it anecdotally at my local coin shop. I've gone in there several times, mainly as a fact-finding mission to kind of see what's going on. The first time I went in there, they sold out of all their silver eagles except for a couple of gilded ones. Next time I went in there, they were gone. No, not a silver eagle to be had, other than proof silver eagles, which are obviously going to sell for a lot more. And the next time I went in there, somebody bought 2 gold 1-ounce eagles and silver. The people were buying it up like crazy. March 12th, the United States Mint said it was temporarily sold out of American Silver Eagle bullion coins. Our rate of sale in just the first month exceeds 300% of what was sold last month, the Mint said. Sales of the 1-ounce American Silver Eagle coins were at 3.1 million so far this month, as of Wednesday, compared with total sales of 650,000 in the month of February, according to data from the Mint. With both the U.S. Mint and Royal Canadian Mint on back orders for the most popular 1-ounce gold and silver coins in the North American market, dealers have scrambled to buy anything that remains available to buy, driving bids substantially higher for all physical gold and silver coins and bars that are immediately available. And it makes sense that these bullion dealers don't have any silver in stock because, well, silver is much cheaper. It's low-hanging fruit. And gold is not taking the hit that silver has. So even with the higher premiums on silver, they're still buying it up, apparently, to where a lot of it is, some places are shutting down. I don't know if they've got, if they're dealers that don't hedge, like Jonathan said in my interview with Monument Metals, who does hedge, then more than likely they're not going to sell the stuff they have in stock for fear of losing their shirt on it. But of course, these days, the prices are as such that you could probably sell it for what you could sell it before the prices went down and make money and be competitive. It's crazy. So with both the U.S. Mint and Royal Canadian Mint, they're on back order for the most popular 1-ounce gold and silver coins in this market. And the silver futures from COMEX saw the most active contract, 2.616% drop to $11.77 an ounce on Wednesday. It's the lowest since January 22nd, 2009, according to the Dow Jones market price. Prices moved up a bit to sell at $12.13. The poor man's gold is on sale today, and the fire sale will not last unless there is an all-out deflationary crash, which brings its own appeal in holding silver as a hedge, said Peter Spina, president of Silver News and analysis reporter for SilverSeek.com. He disclosed that he recently made a large purchase of silver as its price ratio climbed to historic levels at roughly 130 ounces of silver to buy 1 ounce of gold. Wow, crazy. And we covered that yesterday with the widening gold to silver ratio. Silver prices have been seen sharp declines as institutions have dumped silver for cash to pay for margin calls and other obligation, as well as hoarding cash, said Edmund Moy, who was director of the U.S. Mint from 2006 to 2011. And by the way, that's been in the paper markets. He told MarketWatch that the rise in silver bullion demand is just the beginning and is primarily driven by individual investors who see silver as an affordable safe haven because of the lower prices, a buying opportunity. And what's happening? They all get that demand out, and they're coming in and finding out that everybody wants it, so the prices go up. And they're going up everywhere. Affordability is a major factor. Silver appeals broadly to less wealthy investors, but a small change in prices is a larger percentage change for silver. And that upside attracts additional investors, said Moy. Eventually, low silver prices will catch up to limited silver supply and increased physical demand. And once the global economy begins to recover from the pandemic, silver demand from industry will recover too. But it's silver's industrial aspect that makes some analysts a bit more cautious. Right now, silver futures look ready to be to at least bound in a significant way, said Spina. However, if there's a slight global market sell-off, silver futures could get one more historic dump to the $10 area. Wow, and that's not out of the realm of possibility now, especially when we've seen $11. Much of the industrial demand news is not going to be good or great for silver in the coming weeks or months. So we need to get through this biggest contribution factor to silver, he said. Until then, investment demand is returning, and if it keeps like this for several months, and industrial demand catches up, it could really squeeze the price right back up and quickly. Actually, I agree with that. There is some upside because you have to look at silver as an industrial metal too, but it could be this unprecedented demand that could have silver reclaim its safe haven status as a hedge against economic instability. So what is driving this demand? Well, silverseek.com, we talked about it before here too. This is actually coming in from realmoneythestreet.com. But this is saying there's an interesting situation playing out in the markets. Asset repricing is in full swing as uncertainty pushed treasuries higher and stocks lower. In this environment, precious metals are getting crushed, especially silver. I wouldn't say gold is getting crushed, though. It's not the type of uncertainty that bodes well for metals. Yet, there's an interesting situation playing out in the silver markets as the spot price of poor man's gold has fallen 34% since topping out at $18.99 an ounce on February the 24th. Currently trading at $12.57 as this is being written. It's an 11-year low that's occurring during the 2008-2009 market meltdown. Seems like it could be an interesting entry point, especially if you believe that the correction in the spot price has gone too far to the downside. However, if it's the physical silver you wish to purchase, good luck finding it anywhere near the spot price. At two renowned precious metal dealers that were surveyed this morning, the author, physical silver is selling at massive premiums to the spot price. What is known as junk silver, primarily 90% constitutional silver, minted in the U.S. prior to 1965 with no numismatic value, can be had for about $20.62 an ounce, $14.75 for a $100 face bag of junk silver, which contains 71.5 ounces of silver. That's a premium of nearly $8, or whopping 63% above silver's current spot price. 1 ounce silver American Eagle coins have higher spreads to the spot price and lower quantities that can be $12 an ounce and 95% premium to spot. Business is brisk and inventories are low or empty as consumers clamor for physical metal they can hold in their hand. I've never seen premiums this high, which is an indicator of the fear that is so prevalent. There you go. Fear is a common thing. You've been hearing me talk about it. And should we buy silver out of fear? No, we should not. Silver is especially popular because it can be purchased in very small increments. In the doomsday scenario, silver, coins, dimes, quarters, half dollars, silver dollars, and even nickels minted between 42 and 45, which contain 35% silver, are small enough that can be exchanged for smaller goods. That's one of the draws here. But the disconnect between the spot price and physical silver, it's astounding. There are other ways to get exposure to silver. The iShares Silver Trust, SLV, for instance, somewhat closely tracks the price of silver an ounce. While the trust does hold physical silver, it has continued to follow the spot price lower. And good luck getting actual silver forward. Those don't back it. It's the ETFs. Clearly, there's a huge disconnect between the price of spot silver and physical activity, or physical silver, the latter in which demand as fear runs rampant. It's a good representation of the old adage, a bird in the hand is worth two in the bush. When the fear subsides, however, I'd expect the premium over spot to decline sharply and the price of spot silver to rise, closing the gap between the two. What then could happen is up in the air. That's right, and that's just it. I think that's really the bottom line here, is that fear is driving this market, and that's what's causing the prices go up. Let's see what the metal prices are right now. As you can see, silver's up a little bit here, $12.21. Gold is down, squeezing that ratio closer together. Palladium's taking a beating big time, and I just made another purchase of platinum. That's platinum's taking a beating. Palladium is up a little bit, but platinum is taking a huge beating. And I did well on the second purchase, but now I wish I would have waited until now to make a purchase. Hindsight is always 20/20. But regardless, fear is driving not only the precious metals markets, but also ammo, guns. There's a lot of sales of guns and ammo out there, and toilet paper. So everything is, this is just what happened, and precious metals are a part of it. It's a safe haven, and silver is reclaiming its crown in that aspect now. And so that is something that appears to be going on strong and steadily here. And so we'll see how it all plays out. And my feeling is that if you are a silver stacker and you have an appreciable amount of silver, I wouldn't be buying during this time, really. You're not really saving. I would wait for things to normalize or look out for those deals that are out there. There's places like Scottsdale Mint, as was reported by Guido Stackin. Monument Metals has on their deals page, will get silver at a little lower premium, still high premium, but lower than what other places are charging. So look for those out there. I feel like I got somewhat of a decent deal on a tube of Eagles, but I really didn't need to buy those. But I figured, you know what? It's the lowest price I've seen in a while. And even though the premiums are starting to creep up on those, I figured I'd order one. Who knows when I'll see it? But regardless, so there it is. Post your thoughts below. I'd like to extend a multitude of gratitude to you all for watching, and encourage you to please rate, share, comment, and subscribe.